Everybody, today is Wednesday, the 24th of March, 2021. And again, we're below a declining 5-day moving average. It shouldn't surprise us to see more selling when that occurs. As I always point out, and people ask quite often, Brian, what do you look for in terms of a top in the market? And my answer is always the same. I don't look for a top in the market. What I do is I listen to the message of the market on a daily basis and see how that fits together on the weekly time frame, monthly time frame, etc. What we started noticing at the beginning of this month is it started to become a little bit more difficult to make money on the long side with just about anything. And then what we started to notice was that there were a lot less actual official swing trade ideas. Most of the ideas presented were watch list ideas. And of the swing trade ideas that we were looking at, they were coming from groups that we don't normally consider, I don't normally consider as growth type names, names like Heinz, Weight Watchers, blue chip type names. And then again, we started getting stopped out of our longs, and all the small losses that we've taken the last couple of days, and tiny losses, in fact, in those watch list ideas. The reason we call them watch list ideas is because they're not fully developed the way a normal swing trade we would like to see. So when we look at the daily time frame, here again, it's not bearish on the daily time frame, but we're not trading based on the daily time frame. We're trading and deciding whether to commit new capital based on the intermediate term time frame, which is showing a bearish environment. I'm not one to call for a bull market or a bear market, but we're in a bearish environment. It's easier for stocks to come in under pressure here, and tomorrow we'll see if this level, which has been tested a couple times, becomes important or not. That's 347. I don't think it's a major level, but it's a level to be aware of. What we often see is a flush below an important level and then a bounce, but I don't think there's a lot of room to bounce in here still. We're seeing a lot of stocks under severe pressure, especially the prior winners that are coming under pressure, the big names, big growth names, the so-called quality names, and people are going to those stocks and trying to buy the dip. And as I will always say, you don't buy the dip. You wait until after the dip. And here we have the NASDAQ back below its declining 5-day moving average as well. Here we see the 310 level is a more important level for tomorrow, but I don't have a lot of hope that it's going to hold, because we're seeing that the year-to-date volume-weighted average price, that's that thick blue line, and the 50-day moving average have been kind of trapping prices lately, and we're below a declining 20-day moving average, which is below a declining 50-day moving average. So we're not in a bullish environment. I wouldn't be surprised at all to see another test of the 300 level here in the coming days to maybe a week and a half or so. The Russell 2000 is clearly the leader to the downside. As we've noted, it's been in a severe downtrend, lower highs and lower lows below that declining 5-day moving average, and that's the pink is the week-to-date volume-weighted average price, by the way. But when we go over to the daily time frame, we undercut the year-to-date volume-weighted average price, and again, what we had mentioned yesterday was, it bounced in the area of that year-to-date VWAP, but not precisely at it, which is why we look at it as a level of interest. And a level of interest simply means let's take a look on a shorter term time frame and look for any evidence that the buyers are in fact gaining control. And there is no such evidence. Lower highs and lower lows. You have to look at, would you want to short after this type of drop? No, but maybe if it rallied like this, and then perhaps you short the next leg lower. That's a strategy that you may or may not want to employ. But right now, again, the longer term trend, we still have actually a pattern here. If you look at these as the significant highs and these as the significant lows, we still have higher highs and higher lows on a daily time frame. But that doesn't help us when we look at the Russell 2000, which is down 6.5% this week alone. So, that's not where you get paid by looking at those daily trends. We want to be aware of them, but we look at below a declining 5-day moving average, it's guilty till proven innocent. That's why I always say it on the direction of the 50-day moving average is guilty till proven innocent or innocent till proven guilty. The semiconductors are back down to an important level as well, similar to the NASDAQ there, this 229-ish, 228.5 level, and I don't have a lot of hope that it's going to hold here. we are more likely, I think, to test this volume weighted average price, not from that low, but from this low right here, the lower level down near 220, simply because we're stuck below a declining 20-day moving average, which is below a 50-day moving average. That 50-day moving average will begin to decline tomorrow if the semiconductors just go sideways tomorrow. So we have a declining 20 and 50-day moving average. We're below a year-to-date volume weighted average price. This group is still positive year-to-date by about 5%, but that can get wiped out in the blink of an eye, and I wouldn't be surprised to see another test of that volume weighted average price, and there's nothing there to say that it will bounce at that level once again. So the theme remains: be very cautious. Look at the direction of the 5-day moving average and don't try to be a hero. The Biotechs, I mentioned over the weekend video that I thought this group was kind of the canary in the coal mine, that they're, if they were to break in here, they might be more likely to test that 200-day moving average. And it looks like that we're about a day or two away from that 200-day moving average, with this group down now close to 3% year to date. They've been the weaker groups. I switched over by accident, but the year-to-date volume-weighted average price has been the perfect resistance here the last week and a half, and then even last month and a half. So declining, lower highs and lower lows. We broke that support. We didn't get any such rally. Instead, it just continues to sell off. There is a current lack of bids in this market. Don't be the hero with your 100 shares, your 5,000 shares, or your 50,000 shares if you're a big hitter. The point is, let the market settle down before you put your money at risk. If you want to take shots at levels like this, well, then know what your risk is, but you're playing a different game than what I suggest and what I've seen over the last 30 plus years doing this full time. Financials were slightly higher here today, but they got stuck at the 20-day moving average, which is starting to roll over, and of course we're below a declining 5-day moving average, and this prior little band of resistance turned back to support and once again resistance. So they remain guilty until proven innocent.